And today we have Barry Allen joining us. He's the CEO of DMAT Capital Management. And Barry, welcome. And of course, we got the U.S. inflation reading, CPI, this morning. So I want to start there. What is the right read?
Well, interestingly enough, it came in identical to expectations, which is pretty rare. And there are the headline numbers coming down pretty quickly. The core inflation number is coming down, but not as quickly. And there's a lot of kind of distortions in the data because of how they calculate housing costs and owner's equivalent rent, which actually went up during the month, which is anecdotally probably inaccurate. But overall, it's coming down. The trend is important. It's coming down, and it's coming down at a reasonable pace. And I think there's reason to believe that it'll continue to come down at a reasonable pace.
So what does that mean then in terms of the U.S. Federal Reserve? Are the bulls correct in recognizing that the U.S. Federal Reserve does not have to tighten as much as the previous pace, and therefore the market can actually unleash, as it is doing, and continue to rally or find some support at least?
I think that's kind of the consensus view, but I think if you look underneath the numbers, there's some contradictions there that lead me to be much more cautious than the market's doing. I think the Fed is still going to hike rates at least 2 more times and maybe 3. After this number, it appears the Fed members that were in the 50 basis point hike camp in the next meeting have softened it to 25. But I think that it's still very clear that the Fed is going to take the terminal Fed funds rate above 5%. And it's going to be somewhere between 5 and 5.5, maybe in the middle of that. I don't think the story is really what the Fed is going to do. I think the story is how the market's going to interpret it. And it appears to me that the market is, kind of enjoying its normal early year optimistic kind of view of things where reality hasn't quite set in for what the likely probability of the economy and earnings and how long the Fed is going to maintain the rate, because that's really critical. The market is expecting rate cuts this year. The Fed rhetoric is definitely not in that camp, and it remains to be seen how that plays out.
Right. There's a real disconnect in terms of what the Fed is saying they're going to do and what the market believes they're going to do. But I want to go back for a second. Why is it that you're cautious? What is it underneath the surface that makes you concerned here?
Well, I think the critical thing here, Catherine, is that we really don't have any idea what the legs of monetary policy are going to play out to be this time, because this isn't a normal economic cycle. The recession was caused by a pandemic, which essentially caused the economy to stop dead in its tracks. To counteract that, we had massive monetary and fiscal stimulus, which not surprisingly caused inflation. I think it surprisingly that inflation went as high as it did.
Right.
Okay.
And Barry, I'm going to stop you right there. I'm going to stop you right there, and we'll pick it up on the other side of the break.